It is strong, but you know what? It's showing some bit of vulnerability, if you may. Let's see at higher levels does it sustain or not. Innocent, by the way, still frozen on 10% down circuit. We have Pramod Gubbi now joining us, co-founder at Marcellus Investment Managers. Pramod, good morning. Thanks a lot for joining us. How are you approaching this market? You reckon we made some kind of low at 7,500, and if the market gives you an opportunity once again around those levels, would that be a buying opportunity?
Well, I mean, that's the hardest thing in our business, right? Trying to time the bottoms. It's always visible only in hindsight. So, however, we don't really look at the, stock prices bottoming out. We'd rather focus on the fundamentals, which I guess are sort of beginning to look a lot more promising, especially data coming from China this morning has clearly suggested that at least given us some sort of a framework to look at, because East Asian experience is what we have to look for, because that's where it all started. And from what we hear, a lot of the East Asian countries, be it China, Taiwan, Japan, Korea, are beginning to show some signs of recovery. I wouldn't say it's a bounce back to normalcy, at least creeping back to normalcy. That suggests that if things...
Okay, Pramod, I think we have to redial. Just lost the connection. We'll come back to you and we'll get that line reconnected in just a minute. I want to tell you that it is actually metals up and away. Even if you look at the mid-cap space, it's NMDC and of course the big boys, Hindalco, Vedanta, JSW Steel, Tata Steel, that are leading the way. So at the moment, clearly it's the East Asian or China that's keeping the Indian flag flying or helping the Nifty. Okay, Pramod, you were saying if you looked at the East Asian experience, you feel that the virus impact will be controlled in a month or so?
Yeah, whether it's a month or longer, we don't know. East Asia was obviously helped by some sort of an authoritarian regime construct and also better use of technology for testing and tracking the population. I think the Western liberal democracies don't allow similar enforcement, and hence it may not be a matter of 2.5 months, could be perhaps longer, perhaps 3 or 4 months. So rather than looking at whether it's 2 months or 4 months, our sense is you can clearly say 6 months from now, or perhaps 12 months from now, surely we would be looking at a situation where it's broadly under control, perhaps getting closer to a vaccine, potentially a cure. And hence we should clearly, in our minds, think that this is not a doomsday scenario. Things can come back. And once you start looking from that light, then you start focusing on fundamentals, because ultimately you would want to buy stock at prices significantly below its fundamental value. And if the fundamental value is defined by long-term cash flows, and if the conclusion is the long-term is going to be all right, this is a great buying opportunity. Whether it's going to be falling another 5% or 10% from here, it doesn't matter.
Yeah, no, it doesn't. But Pramod, yesterday Prashant, my colleague, was making this comparison of how indexes, the DJIA and the S&P behaved post 2008. While there was a big waterfall, 35% cut from August 2008 to October 2008, there was a smart 20% recovery. But the bigger fall of about 50% came the following quarter, Jan to March of 2009. So, that is when the second round effect of this problem on the economy was realized by investors. So do you think that even if we recover now as Johnson & Johnson announces a vaccine, or the incremental number of those infected starts coming down, will we see a big fall later in the year as you realize that the economy cannot get up that easily after such an infection?
Yeah, I mean, quite possible. Like I said, it's a bit of a monkey game trying to predict the markets in the short term. So we didn't attempt doing that. But even there, I think if you compare it to the 2008 crisis, the reaction from the governments and the central banks have been far more swift. Perhaps having learned from that experience, the amount of liquidity that's been committed by the central banks, almost $6 trillion, and still counting, and the fiscal stimulus, which has come in double quick time from the Western economies, again, north of $2 trillion. this could arrest possible impact on the economy. I wouldn't say that there won't be any further lows, because I think in the short term, stock prices are driven by sentiment as well. And as we see further bouts of this virus coming in, which is quite likely, you will see sentiment affecting stock prices despite the liquidity. But at least out of the two factors that affect prices in the short term, sentiment and liquidity is on your side. Sentiment, all we can do is cross our fingers and pray.
Okay. By the way, just look at the bank nifty. That's now beginning to lose quite a bit from the high point, and that's the point I was making, that the first gap up would be sold into for sure. After that will be the test of the market. The bank nifty future in fact is now up only about 1%, and the open high, which was around 19,300. So from that point now we've given up 300 points on the bank nifty future. As you can see on the screen, there's a first red bar, now there's a second red bar which is forming, and it will be interesting to see if we indeed have a third red bar as well, and which takes us perhaps to towards yesterday's low. Yesterday's low of course was still some distance away, so perhaps between now and yesterday's low, if there's going to be a second round of buying, we'll see that. But just want to point out a couple of stocks where we're seeing some decline, Lata. There's obviously IndusInd Bank, which is still frozen. RBL Bank is now beginning to see a bit of a decline. Bajaj Finance, I think that's the problem point for the market once again, and it's now fallen about 56%. So large financials, there's a bit of a problem, clearly.
No, actually that's exactly what I was going to point out, that the bigger fall, while you pointed out correctly that the Nifty Bank is losing ground, actually the NBFCs are losing ground, and that too marquee names. Bajaj Finance and Bajaj Finserv in the past few minutes have lost about 7% or so. Just pull out those, look at the waterfall kind of steep fall that you're seeing in Bajaj Finance and Bajaj Finserv. Pramod, on that note, is this the time to buy some of these NBFCs which were coveted but were so pricey?
Well, yes, of course, provided you factor in a couple of points. For any NBFC, it's survival at times like this which can be the real test of it, and that's driven off two factors. One is the strength of your balance sheet in terms of your capital to be able to take some losses, because I think losses are inevitable. There will be an NPA spike no matter how high quality a lender you are, given the economic situation on the ground. And secondly, your liability franchise in terms of your reputation in the borrowing market, whether it's retail term deposits or wholesale liabilities. If at times like this, if you're able to raise liabilities at a reasonable rate, I think rates for everybody will go up. But if you're still able to access liabilities, I think those are the two factors to consider whether this NBFC will see the light of day at the end of this crisis. And hence, the name that you mentioned, Bajaj Finance, obviously ticks the box on both counts. We've seen them raise capital towards the end of last calendar year, and also given the reputation of the business house, it's got a strong franchise in terms of retail deposits, which we reckon should hold it in good stead, despite the fact that it will also go through some sort of an asset quality spike coming through in the next few quarters.
Okay, well, for now, even in the mid-cap space, actually things are coming off a bit. The auto space is under a lot of pressure. So there's names like Apollo Tyres, Bharat Forge, that are all under pressure. Even the auto financiers. So whether it's something like an M&M Finance, you have a Chola Finance that's down 3%. And along with IndusInd Bank, RBL Bank is also under pressure, down about 3.5%. Pramod, hi, morning. So we've been talking about a lot of the businesses that will get disrupted. But on the flip side, there are businesses that will thrive as well. Telecom, for example, with the increased data usage, increased working from home, there are a lot of brokerages that are now optimistic on names like Bharti and Reliance, despite the run-up that these stocks have seen in the preceding months. Do you think telecom will continue to be an outperformer, and would you put some fresh money to work here?
Well, I think from a macro demand perspective, there's no doubt there will be more digitization of economies globally, and so in India as well, which means that there will be more usage of data and bandwidth. which is great from a demand perspective, but that was never the challenge. Remember, we've had the highest level of subscriber growth, highest level of data growth compared to similar countries, in fact, across the globe. So demand has never been a challenge for this sector. The sector has had issues with monetizing that demand, and also monetizing in such a way that the continuous calls on capital, whether it's to pay for spectrum or to invest in new technology or network expansion, those have meant that returns on capital in the sector have always been below cost of capital. So unless and until we see a structural change in the industry structure where returns on capital can come back to healthy levels, at least greater than cost of capital, at least it doesn't meet our investment criteria, and we tend to stay away from it.
Okay, Pramod, the one space where we have seen, some of the stocks hold out are some of these MNC names, like Lever, for example, Colgate relatively doing better, Nestle, this MNC Pharma which has done well. Anything that you like here?
Yeah, we own quite a few of them. We have 3 healthcare stocks and a couple of FMCG stocks in our portfolio. And this is, right up our alley in terms of the criteria that we look for. One of the 3 criteria that we look for in the stocks are the company should be in the business of producing goods and services which are essential to the common man. As a result, revenue growth tends to be very less volatile, at least relative to the rest of the market. And that keeps the earnings and hence the stock prices also relatively smooth. It allows investors to stay invested over the long term. And some of the companies that you mentioned also enjoy some strong competitive advantage in the form of brands and distribution networks, which will again ensure that they will be better positioned to weather the storm through this crisis. And on the other side of the crisis, emerge out much stronger when you're perhaps one of the few last men standing, and hence you tend to take the whole recovery to yourself. So not only do they fall less in such times, but they also tend to recover faster and perhaps more sharper than the rest of the market.
Okay, all right. Pramod, thanks a lot for stopping by and speaking with us. The market is definitely off its opening high, so very, very volatile as we speak.